Hi, welcome to investorsidiots.com. This is Arjun Patsati, your editor speaking. Equity Research Part 5. We commence Equity Research Part 5 with research on Tata Motors. In the first 4 parts of Equity Research Analysis tutorials, we introduced you to equity research and we took you through the process of collecting information and presenting basic facts. Tata Motors is a transparent company, well reputed, well known, and part of the Sensex. And the company gives out enough information which is publicly available, and which makes it easier for one to do analysis on the company. Let us start off on how to go about starting off an equity research on Tata Motors. So we'll take you through step-by-step process, and by the end of this whole series of tutorials, one would be able to carry out research with publicly available information. The whole research process is going to be easy for investors to understand. You need not be a professional analyst to actually start doing equity research. All it needs is a bit of logic and the way you collect and analyze the information which is publicly available. So the basic objective of equity research should be to come to a conclusion whether to buy or sell a stock. There is no other objective an investor should have. You do have something called holding stocks, but you should have a very clear view why you're holding. If you're going to hold it, you bought it on a historic purposes and it's going to give you decent dividends, yes. But if you're going to hold it without any reason for holding it, then you'll have to relook at why you're holding it. So basically, the conclusion we'll always come to when we're doing analysis whether to buy or sell the stock. And if you're holding the stock, you sell it. If you're not holding it, you don't. And if you can either buy it or you need not do anything about it. There are 4 parts to equity research. One is company specific analysis. You have sector specific analysis, you have market specific analysis, and economic specific analysis. In the first 25 tutorials on equity investments, we have covered the fundamentals of equity research in the company specific analysis. The other 3, which is namely sector specific, market specific, and economy specific analysis, will be taken as we go through the process of equity research. So first let's put across what is the market information on Tata Motors. That should be the beginning point of your starting off your equity research. So the current market price of Tata Motors is rupees 230. The market capitalization on a full float basis is 76,700 crores, and on a free float, which is adjusted for promoter holding, is 45,600 crores. It's listed. The shares are listed on the BSE, NSE in India, and the New York Stock Exchange, the US. You have the shareholding pattern where promoters hold 35%, FIs hold about 25%, and domestic institutions around 14%, and the rest Indian public. This is just basic information as a starting point for you to start off your analysis. It's not going to change your analysis because you'll be using these in conjunction with everything else. Again, you have the share price performance over the last 5 years, and it's compared to the Sensex as well as the BSE Auto. It just shows you how the shares have moved over the past. You should not take this as how the share is going to move in the future. This is a fundamental analysis, not a technical analysis. So hence, the past share price should not have very high relevance to future share price. So let's look at the snapshot of the businesses of Tata Motors. That's the starting point of your analysis on the company itself. So you have, on a consolidated basis, Tata Motors has many businesses, largely in the vehicle market, passenger and commercial vehicle market. It has some few subsidiaries, and so you'll have consolidated results, and you'll have to see which which business contributes to what percentage of the total consolidated results. So you have Tata Motors consolidated results for the first quarter of 2000 financial year 2013, and you have its profitability. All this information is available in from the company website. So you have the contributors to the consolidated results. So if you look at the top line, which is the consolidated results, which is given in rupees crores, you have for the first quarter 2013, 43,323 crores was the total revenues, and the company made a profit of 2,244 crores. You have the growth figures, everything else given, but right now our purpose will be to look at what is contributing to what to the total results. So Tata Motors standalone, which is the Indian business of Tata Motors, contributed 10,586 crores. Then the Jaguar Land Rover business, which acquired from Ford in 2008, contributed. They have given it a GBP million, which is British pounds, 3,638 million or 3.6 billion pounds. You have subsidiaries of Tata Motors, which is Tata Motors Finance, Tata Technologies, and Tata Daewoo Korea, and TML Drivelines, contributing part of the profits and revenues and profits of Tata Motors. So let us see which business contributes to what percentage of the total revenues and profits. So you have Tata Motors standalone, which contributes to 24% of sales and just 9% of profits. You have JLR, which contributes to 71% of sales and 84% of profits. You have Tata Motors Finance, which contributes 1% and 3% of Tata Technology, 1% of sales, 3% of profits. Daewoo Korea and Drivelines, very marginal contributions. Hence the subsidiaries, except for JLR, the subsidiaries of Tata Motors like Finance, Technologies, Daewoo Korea and Drivelines do not really account for too much of the company's revenues, though they do account for maybe 6-7% of profits. So that's not as important. That's not going to be so important for us. It's the JLR business which is going to be extremely important because it's contributing to 71% of revenues and 84% of profits. And Tata Motors standalone is contributing to 24% of revenues and 9% of profits. The domestic business, if we go back to the previous slide, the domestic business has actually not done too well for Tata Motors. You have seen Tata Motors standalone actually for the first quarter show a negative revenue growth of 9% on a year-on-year basis, and profits have actually fallen sharply by close to 50%. Whereas if you take the JLR, which is Jaguar Land Rover numbers, it's gone up. The revenues have gone up by 35% in the first quarter, and profits have gone up by 7.5%. So clearly, the JLR business is actually contributing much more to Tata Motors than this domestic business, and so you could actually say that JLR is actually supporting the company at this point of time. Will this continue? The purpose of our analysis will be to understand what is going to be the outlook for the domestic business, what is going to be the outlook for the JLR business, which is extremely important right now, given that its contribution is heavily skewed to the whole consolidated financials of Tata Motors, and its subsidiaries, while it doesn't look very important at this point of time, will also have to be analyzed, because you never know. You will have to look at the leverage those subsidiaries are carrying, and if there could be any potential losses actually in those subsidiaries that could drag bottom lines going forward, or if some of the subsidiaries can show extremely high growth leading to more contribution from them. However, what's going to lead Tata Motors forward at present is obviously the JLR business, while the domestic business is undergoing issues, and whether that can turn around or will it deteriorate. That will be the object of our analysis in the next few tutorials of equity analysis. So we look forward to for the next tutorial, and where we'll take you through the analysis of some of the business of Tata Motors. Thank you very much for attending the tutorial. The subscription for tutorial and equity investment is 4,000 per annum, where you will get all the past tutorials, which includes 25 basics on equity investments and the current series on equity research analysis. We have also offering a no nonsense pack where investors can get all the content, which includes right from learn to be a fund manager series, selecting stocks for the future series, link between currencies, commodities and equity series, the equity and fixed income tutorials, Ravi series on personal finance, and fixed income investment series. All this are only 15,000 per year. You can contact Neelima at info@investorsideas.com for any queries. Thank you very much.